In today's episode of the Brisbane Property Podcast, we are going to unpack the difference between a buyer's agent and a qualified property investment advisor who is also a buyer's agent. And we are joined today by our very own Briley Maddock from the team at Streamline Property Buyers. We hope you enjoy this episode.
Welcome to the Brisbane Property Podcast with your hosts Melinda and Scott Jennison.
Hi everyone, and welcome back to another episode of the Brisbane Property Podcast. Today we've got a guest of ours, one of our members of our team here. We've got Briley joining us. Welcome, Briley.
Hello.
So an interesting topic which we're going to chat about today, which people probably won't understand much about this. And when people start to look at buying property, they can engage a buyer's agent. But there's also a different level of type of service, I guess, if you want to call it that, where we talk about a QPIA. Now, a qualified property investment advisor, which I will get Melinda to probably jump in and explain that. And just to let our listeners know, in our team, we actually have 3 qualified property investment advisors, and I'm actually joined today by 2 award-winning QPIAs. So in the recent awards with PIPA, and again, I'll get Melinda to explain a bit more about PIPA, the team took out, or between you two guys, 4 awards out of the 9. So QPIA of the year, Briley, and graduate of the year, and also Melinda was buyer's agent QPIA of the year and also property investment advisor. So enormous awards. But Melinda, can you just explain to our listeners for starters, what is PIPA as an organisation?
Look, PIPA is the acronym for the Property Investment Professionals of Australia. So that is an association that exists to advocate for good quality property investment advice in an industry that's not actually regulated. So it is an organisation that advocates a lot to government to ensure that the advice people are giving others in relation to investing in property is actually appropriate advice. I think in today's day and age, we've got a lot of property spruikers out there who give advice not that is in the best interest of others, but in a way that actually fills their pockets with commissions. So the Property Investment Professionals of Australia is an association group that encapsulates best practice in this industry, and there's a code of conduct that members need to abide by if they are members of PIPA or the Property Investment Professionals of Australia. So that is PIPA. And of course, I'm privileged to be sitting next to Briley, who's part of our team. And between us, we did receive a number of awards at the National Property Investment Professionals of Australia Excellence Awards. Now, that was back in May, and at that time, the purpose of those awards was to acknowledge those in the industry that really do provide excellence in advice specifically tailored for individuals. Now, QPIA, as another acronym, stands for a Qualified Property Investment Advisor, and that is different to a buyer's agent. And I think that's going to be the crux of what we're going to talk about today, so that those that are in the industry that perhaps are looking to invest in property can actually ask the appropriate questions to understand who they are working with, especially if they're working with someone that is giving investment advice. It really is critical that that person is qualified to do so.
Briley, obviously our listeners probably won't know a lot about this, but people, when they're looking at buying property, you can engage a buyer's agent, which will obviously help you buy a property, or you can engage a buyer's agent that's a QPIA. Can you give us something as an example of what might be a little bit of the difference between a QPIA and just a standard buyer's agent?
So a qualified property investment advisor is able to provide tailored advice on a per property basis for that client's specific needs and wants and goals with their investment in the future.
So Melinda, then a qualified property investment advisor obviously doesn't just get a client, for example, come to them and say, I want to buy this type of property, and they just go and shop for a standard property. There's more involved in obviously that research when you guys start to look at it and do the numbers and start to analyse properties.
Yeah, as Briley said, the property recommendations are really tailored for that person's specific needs. And something that we do as qualified property investment advisors within our team is provide a tailored strategy session so we can really unpack the numbers. We use specialized software to ensure that we understand the numbers associated with an investment. And I know, Briley, we do a lot of investment projections for clients as well, using that software just to give our listeners an understanding of what are some of the inputs that we use. What does that software involve? Like, what sort of numbers are we putting in there?
So we put in purchase costs, which includes stamp duty, transfer fees, conveyancing and building and pest fees. We also include rental expenses such as agents' commission, maintenance that is involved we average out for the year, maintenance costs, insurances, things like that. It takes into account the rental income per week, and then also loan amounts, interest rates, principal and interest repayments, interest-only repayments, and gives you a rough estimate of what that would cost you to hold each week.
Yeah, I was going to say, so that will obviously really tailored to each property and each person, as you say, each client, where you're talking about the rental income and all that type of thing. It obviously projects and forecasts how that property will perform, but it also shows you that holding cost per week.
Yeah.
Yeah, and that's something that you don't get when you just go and buy a standard property for a standard buyer's agent, if you like to call it that.
And if I can also add, because I think that's an excellent summary, Briley, of what that software encapsulates. The whole purpose of that is to help gain some clarity over what type of property best suits that individual investor's needs based on the numbers, because property investing should be very objective and non-emotional. Every property investor that we would work with has a different set of goals, different time frames, and a different risk appetite. And as qualified property investment advisors, it's our job and our goal to always extract that information from a client to understand what type of asset is best suited for their needs, for their portfolio, and for their personal circumstances right now, because we have to take into consideration their current income, their current expenses, what taxable income they might be on. The structure of their finance also matters, and the software that we use really enables us to dig down into those numbers. And, Briley, I think you'd agree, a lot of the clients that we work with are more concerned about how much it costs to hold an asset than the actual cost to purchase the asset, give or take.
Yeah, absolutely.
So I'll keep it simple, because I don't think a majority of our listeners will understand the difference between a QPIA, I should say, and a buyer's agent. But when you talk about the projections, so your financial projections, your holding costs, things like that, obviously there's an element of wealth building and obviously tax. So people need to be aware of, one, how much tax they're paying at the moment. Do they want a cash flow property? Do they want to negative gear it? Do they want it neutral? Obviously, all of the information and the software that a QPIA completes in their research will cover all those types of things.
That's right. So, it's our responsibility to help people understand the numbers behind their property investment purchase before we even consider where we're going to buy and what we're going to buy. And I think the big difference also between a QPIA buyer's agent and one that doesn't hold this qualification is that, someone without QPIA direction is more likely to ask, what is your budget? And then make recommendations of which suburbs in Brisbane you can buy a certain product type with that particular budget. So there's no strategy behind, what type of capital growth or yield projections someone may need to achieve their long-term goals, whereas the software that we use enables us to run various scenarios in relation to someone's portfolio over a 5-year period or a 15-year period or a 30-year period. It really depends on an investor's time frame, and we can look at the difference in capital growth projections over that time. If we have, inferior capital growth or superior capital growth, how does that impact the investment over that long period of time? And also what the impact of a higher rent per week might do to the actual holding costs or the income that a property is able to generate on a weekly basis. And this is really important because we always find that not everyone is going to be on the same income level. So any tax benefits associated with holding an asset, that will vary depending on how much income someone is already generating through their pay-as-you-go income or through their company income. And of course, we can even account for different structures in how people are purchasing those properties to get very real accuracy in terms of what the numbers look like before we even look at location and property type.
Now, it's not financial advice.
Correct. It's not financial advice.
Yep.
It's simply advice in relation to property. And I think one thing that a lot of clients potentially, or we can assist a lot of clients with, is helping them understand the cash flow position of a property. Because, Briley, I think you'd agree, when we're looking at a principal and interest loan versus an interest-only loan, sometimes the structure can have a significant impact on cash flow.
Yeah, absolutely.
Has it helped you personally?
Yes, it has.
Doing the course?
Yeah, definitely.
And I think that's incredible how it can educate someone to be confident when they're not only helping a client, but also helping themselves as well.
Mm-hmm.
I noticed when you talked then, Melinda, about doing the numbers and looking at their tax, looking at their wealth, their strategy and that sort of thing, you actually didn't mention the location and the type of property until later in the journey. So it's not something that you would say, oh, look, this is where we want to buy and this is how much we want to spend. That when you were talking there briefly, that seemed to come later on down the track once you'd actually done all of the work that you do behind the scenes.
Well, I think that's the main difference between what a QPIA buyer's agent would provide to a client versus what a buyer's agent who doesn't hold that qualification would provide. And I know we get a lot of inquiry from property investors saying, oh, where do you think are the best locations to buy? And we're always saying, well, that of course depends, because we don't know enough about your circumstances to give you accurate advice around which suburbs or which locations or which property types would best suit your needs. Because as a team, we do a lot of research in-house to understand why certain locations have historically outperformed others here in Brisbane, and what are some of the attributes that lead to suburbs having a higher capital growth over the last 30 years compared to those that have underperformed over the same period of time. And then that allows us to be very objective in how we select our properties. So as a team, we'll always run through a strategy session to understand the numbers first. And then once we know the numbers, it's very easy then to allocate, the suburbs to match those numbers, and of course the property type to match those numbers. And, in a typical client brief, for example, Briley, how many suburbs would we narrow that down to if we were looking for, a specific brief for a client? Would there be, 30 suburbs or would it be less than that?
Probably anywhere from maybe 8 to 12 suburbs that we would select,
so
depending
really,
on the brief.
And that's tailored to not so much the client, but the client's background, the client's needs, the client's, as we talked about, their tax, their wealth and all their what they're looking to achieve in their investment strategy side of things.
And also, once we get down to a suburb level, Briley, do we buy the whole suburb for clients?
No, we're very specific to suburbs. We're not specific, to suburb boundaries, and we don't buy in every pocket of a suburb either. We always make sure we buy in the best pockets of the suburbs, just to ensure they're going to be most desirable to tenants, and also when you look to sell in the future.
Yep.
It's a very good point, because, I think that a lot of people that buy on data alone would data can bring people to a certain suburb. However, nothing can then replace that local knowledge that we are able to apply as on-the-ground buyers agents, because, like many others, the data will take us to a suburb, or the objective information will take us to a suburb that aligns with an individual's goals and strategy. However, once we identify certain suburbs, we might only buy to the east of a certain road within a suburb, but not to the west. We may only buy in 5 streets of that particular suburb, but not, in the other 40 streets within that suburb. And this is where local knowledge then comes into play. And it's that qualitative information, on the ground information that we collect from being locals and understanding areas that really helps.
I think that local knowledge, again, with the combination of the qualifications, that local knowledge is important. It's also when you look at, obviously avoiding making mistakes is so critical, which is why people need the help, and they need all the information. And the more information they have, the more of an informed decision they will make. The biggest thing, I guess, when people buy something, and if they say, oh, look, I wish I didn't buy that property, the cost then to sell and to buy again is enormous. And that's where you'll actually chew into a lot of your money, and that's where you'll make a lot of your mistakes.
Yeah, the transaction costs in property are significant with, selling costs. You pay a sales agent, you'll always pay advertising to find the buyers. And of course, if you're buying back into a market after selling out an underperforming asset, you will have the costs of stamp duty being the biggest. Of course, there's conveyancing, building and pest costs, and potentially a buyer's agent fee if you are using a professional service. And often we find a lot of people will use us because of mistakes that they've made previously, and they're really looking for that education. And a big part of what we do as a service and here at Streamline is to educate our buyers, especially our property investors, to become really confident in the recommendations, because we help them understand why some locations are going to be aligned with their brief and why others are not. And we also help them to understand why some properties are higher risk than others. And therefore, we would rule those higher risk properties out. There's a lot of people that are a lot more transactional in the buyer's agent space. And I guess that's something that we're very careful of only buying something that we'd personally be recommending for our own portfolios. And that's the exciting thing at Streamline. We all own property ourselves, so we're all building our own portfolios at the same time as building the portfolios of others.
Riley, I know when we talked about the projections that you do, the financial projections for properties, obviously, and I know what happens, obviously, because I see it in the office here all the time. But when a client's looking to purchase a property, or we're looking at a property for a client, you'll do projections. Okay. Once they purchase the property, and then there could be changes to the interest rates, there could be the rental, it might go from 800 to 850 or whatever it may be. You'll adjust all that for the client, obviously, for once it's all completed.
Yeah, definitely. Once they've settled and they have confirmation of all the rental costs and loan figures, then we can update the projections and send that through so it's more accurate for the clients as well.
Yeah, but the initial start of it is, I just think that is fantastic. And we've shown this to people before, and they've never seen that type of software where you can actually say, look, this is your holding cost per week, and this is how it's going to progress.
Yeah.
That is a bit of a game changer. I think when people actually see that, I think that's that wow moment that people jump in and go, oh, this is brilliant. This is exactly what I'm after.
Yeah.
And I think then once you've got that completed and you've gone through the process, it gives people the confidence to know that what they've purchased is actually what they're after.
Agree. And I think also with the information that we provide to clients, especially in that post-purchase phase, once we know the accurate sales price and the rental amount achieved, and as you've said, Briley, we're adjusting for any loan costs and the actual interest rate, it enables the clients then to have a template of performance, a baseline template of performance. And then with their annual reviews, as they're reviewing their portfolio, they can cross-reference the actual performance against what was projected and then make adjustments to the overall portfolio plan as they continue on into the future. And this is all part of this is all a reason why aligning with a qualified property investment advisor can give you, as a property buyer, the skills to be able to manage your own portfolio. And that's ultimately the most important outcome when we are partnering with people. And we always say, I'd rather educate you to be able to manage your own portfolio rather than taking over that process and managing that whole process on your behalf, because it's important that investors understand what they're putting their money into so that they can become more confident and more informed themselves.
I know it is really hard to explain to our listeners what it's all about, but during a strategy session, and I don't know how many times I've heard you guys walk out of a strategy session and say something that, that's what the client actually understood. And when you actually show them that information, what do they get out of it? What is that point?
The aha moment.
I
think that's what we often describe as that aha moment. Generally, it aligns with discussions around educating them in relation to their personal taxation position. So personal debt versus investment debt, structuring the portfolio. Now, we cannot give advice around mortgage structure, nor can we give advice around tax. As qualified property investment advisors, we can discuss different options to educate, and then we encourage all clients to seek advice from their accountant or from their mortgage broker in terms of what's best for them. But there is often that aha moment that comes when we're looking forward 5 or 10 years from now, because the performance of an asset over the long term ultimately can make a huge difference depending on what type of asset, or more importantly, the location that the asset sits within Brisbane. And we know that based on not only past performance, but also future supply and demand metrics. And this is the sort of information that we teach clients. How do you go about selecting a location that's got more price pressure because it's got more capital growth indicators? And we are able to teach all of that to our clients so that they can become more informed.
Something that I probably hear a lot when people talk about building wealth, and obviously part of what you do as a QPIA is look at not just this purchase, but what could be the next and what could be the wealth strategy for people to say they're looking to build a portfolio or setting up for retirement, whatever it is. Obviously, there's time frames and all that involved. And I hear people, and I get this in inquiries sometimes, where someone says, I want to buy 10 properties and I want to have 10 properties in my portfolio in 10 years. And I mean, is that a strategy?
Quality over quantity.
Yeah.
I think we often talk about quality over quantity, and we often have people ask, should I buy 2 or 3 properties with my budget, or focus on one? Look, generally the answer is it depends on circumstances, but those that are on much lower incomes buying in their own name may need to purchase properties that are higher yielding properties in order to actually satisfy funding requirements. So we're always guided by the individual's personal circumstances. But at the end of the day, everybody might be looking for something different out of their property portfolio. And I think what we help our clients to do is really plan out those phases of accumulating property, consolidating the portfolio, and then how do we transition that portfolio into an income producing asset at some stage in the future. And the time frame that we have to work through those phases with every client will differ. So therefore, the advice around how we exit might also differ. Some people also want to hold property long term and, pass it down to their family. Other people prefer to have an exit strategy where they do intend to sell and put that cash into more liquid assets. Well, the scenario in both of those situations and the advice that we may give to people in both of those situations would differ, and the type of asset that we might even recommend in various situations like that would also differ. So, our role is to extract that information from clients. And then once we've got the clarity in terms of what the numbers look like, make the appropriate recommendations in terms of what and where to buy, and then go about actually implementing that through the buyer's advocacy service.
So in a simple way to put it, then it's not a blanket approach, Riley. It's like Melinda was just talking then about, I don't know how many times you said the word individual. It might be your word of the day, but it's not individual. It is individual. It's not a blanket approach. So it's not a one size fits all to say I've got a budget of this much and here's a property, we'll just go and buy it. It's all really tailored to an individual's needs and requirements.
Yeah, definitely. And I think the QPIA definitely helps with that as well.
Can I ask, Briley, and this is more for the listeners' benefit, in how do we demonstrate our knowledge to clients through day-to-day activities? So, for example, are we only showing the properties that we think are a match, or is there more that we're actually doing to demonstrate our knowledge to clients about what properties might be suitable and what properties are not?
No, we definitely, we like to educate our clients daily or every couple of days just with everything that we are looking at in the market. So we send through some examples of what we've been looking at, but have ruled them out because of XYZ, location, impacts, quality of build, things like that. So we definitely like to keep our clients updated very frequently with what we're looking at in the market. And then once we have found a property that is of interest, we definitely provide a lot more information that is specific to that property.
And we think that is actually a critical point of difference that a QPIA is providing, and it's around education, because as we've pointed out, when you find a location that you're targeting, we don't buy the entire suburb. So then it's about educating around which pockets within the suburb. And here at Streamline, we actually do give those examples of, hey, we've looked at these 5 properties in the last couple of days for you, but unfortunately none of them are suitable, even though they're in the target location. And these are all of the reasons why they're not suitable. And then we outline and explain that, which helps to further educate and obviously build confidence in what we are looking for, because it's very, very rare for the perfect property to become available straight up. And if we think that we could do better based on the client's brief and budget, then we're certainly the type of buyer's agents that will wait for better and not compromise by buying a B or a C grade asset.
Definitely.
So obviously from what I hear, there's obviously a lot of advantages using a QPIA compared to a standard buyer's agent. I'll get Melinda to run through some of the code of conducts and things like that in a minute. But for the standard purchaser, someone looking to buy a property, looking to get in investments, whether they're building a portfolio or whatever it may be, obviously when they look at using a buyer's agent and a QPIA, is there a massive cost difference?
Well, I don't believe that there's any cost difference in terms of what some of the other buyers agents might be charging. I think that it's a value add. And look, for our business, I think it's based on caring, and it's based on, making sure we're providing the best possible outcomes for our clients, because we want our clients to come back in 5 or 10 years' time, as they are doing already, with a solid equity position in order to continue to build their portfolio. And, there's nothing greater for us as a business than to be able to continue to assist people on their investment journey. Now, not everyone builds a portfolio in a single city, but we do help our clients to connect with like-minded QPIAs or qualified property investment advisors in other locations throughout the country, so that the clients have a one-stop shop to be able to provide some more holistic advice. And of course, because we've educated them on how to build that portfolio, then it's just a case of connecting with others that may be able to assist in that on-the-ground knowledge at the time they're ready to make that transition into the next purchase.
I guess the reason I ask that is when people hear that you've got more qualifications and that you're so much better than others, or whatever you want to put it, they probably presume that it's going to cost more money. So yeah, as you both mentioned, then it's very similar to what a normal buyer's agent would cost, but you get that more certainty and more education, I think, and that individual approach to what your investment is going to do or look like, to give you a lot more confidence. Just quickly touch on, Melinda, some code of conduct, if you can, for compliance side of things.
Look, I think that Property Investment Professionals of Australia have a code of conduct, a professional code of conduct that all members must abide by. And of course, as qualified property investment advisors, not only do we abide by that professional code of conduct, which requires us to operate in an ethical way, be very transparent about any commissions that are being paid or received, and obviously always keep the customer at the forefront of any decisions that we're making. There's a lot of people that work in the property investment industry that certainly don't disclose a lot of commissions that they're earning behind the scenes. They're not operating in an ethical way because they're giving blanket advice to everybody, and it may not be in line with what that that person's personal circumstances require. And there's certainly a lot of people that don't operate in a professional way, and we know that through the property spruiking industry, which is often talked about. But, there's also compliance with other codes of conduct that businesses can associate themselves with. So in the buyer's agent space, of course, being aligned with the local real estate institute bodies also requires that those agencies are operating in a way that complies with best practice guidelines as well. And I feel like there's also a lot of operators that don't meet those best practice guidelines. It's something I'm very passionate about. But of course, as buyer's agents, there's a code of conduct that is in place. It's put out by the professional body that represents buyer's agents nationwide, and that is REBA, the Real Estate Buyers Agents Association of Australia, for which I am currently the president. And we really advocate for industry best practice, because what we as an organisation aim to do is ensure that those that are operating as buyers agents across the country meet minimum standards in terms of what is required for service delivery. So I think that anyone that's looking to partner with a buyer's agent that's also providing some investment advice throughout that journey should be seeking out members that or agents that are affiliated with these professional bodies that have taken the time to further educate themselves around property investment metrics by becoming a qualified property investment advisor. And that's going to mean minimum risk for the consumer, because there's so many minimum requirements that agency must be complying with.
I guess when I hear everyone talk, well, you guys talk about the QPIA and the qualifications and the service that it actually provides, it makes sense to me when I look at it, because I look at the qualifications for such a big investment. It's a huge, huge investment to invest that amount of money to buy a property, whether it's your own house or whether it's an investment property. It's a massive amount of money, and to do it with people that are probably, let's say, not as qualified. If you took your car for a service, you're going to take it to a licensed mechanic, someone that's got a license and is qualified to do that work. If you're going to use a tradesman, whether it's a builder, electrician, a plumber, you'll get someone that's licensed and qualified to do that type of work. But yet people, when they look at investing into property, will go, oh, I'll just go and get someone because they can help me, but they don't look at the qualifications. I'm still astounded, but I just look at it and it just blows me away that I see that. And people will trust someone that doesn't have all those qualifications. So I think the qualifications and those types of things are something people should really, really look at.
I agree. And, we're very proud of the opportunities that we're providing to all of our team members to upskill. Now, Briley's been a qualified property investment advisor now for 18 months.
Yep.
That's right. And, already within that short space of time, she has been recognised at a national level by taking out 2 of the very top awards at the Property Investment Professionals of Australia. This is industry standard awards. So, that gives consumers a level of certainty that they are dealing with a professional, and that Briley knows what she's talking about. And we do a lot of training as a team in-house to upskill everybody, so that when we are providing those personalised recommendations, we're ensuring that the property that we do buy absolutely aligns with that individual's unique needs and unique circumstances, because property investing should never be a one-size-fits-all approach.
So if people are looking for that type of advice, reach out to Streamline Property Buyers, and we've got all the qualified people here in our team. You've got not just qualified, but award-winning QPIAs that I'm sitting next to. So QPIA of the year and Property Investment Advisor of the year. That's the top notch. So look, hopefully that's given everyone a bit of an understanding the difference between what we QPIA and just a standard buyer's agent. And if you're looking to get into property and avoid making those mistakes, have a chat to the team at Streamline Property Buyers. We're always here to help. As usual, I will let Melinda wrap things up. Riley, thank you for joining us on the podcast.
Thank you for having me.
Fantastic job. And I'll let Melinda wrap it up. Until next week, we'll talk soon. Thanks very much, and bye for now.
Yeah, I'm super stoked that Briley has agreed to come on the podcast to share her insights with us. So thank you for sharing all of your knowledge today.
You're welcome.
As usual, we hope you have enjoyed this episode, and I hope it's provided some insights into what happens behind the scenes when you are working with a QPIA qualified buyer's agent as well. As always, if you've enjoyed this episode, please share with friends and family. We would love for you to leave us a review so that more people can benefit from the content that we share. Until next time, have a great week, and bye for now.